Hi there, and I am Peggy, your crypto gal, and I'm not going to talk about crypto today. I'm really focusing on what's going on with Powell and our Feds and Yellen and what they're trying to describe out there, you guys, because I think this is really, really important. It's going to set a whole standard high as to what's happening with the market. I think this is where we're seeing a lot of different changes that are going on in the stock market since Monday after a quiet close. I mean, even 2 days ago, the Federal Reserve kicked off a much anticipated meeting. And I'll get to some sources of descriptions and definitions because I always like to be able to explain, because I've had a lot of people go, what the hell are you talking about? And it scares me when people don't do that read and research, or they really don't know. I guess I take an interest in it because I'm so excited to learn more. And as we increase over the years, I'm going to say, I'm not going to politically dive into this, that it's been an acclamation. Now, before I get started, dingle my bell, like my videos on YouTube, definitely subscribe to me. It's exciting times with me. I never have a dull moment, I promise you. I try to be positive too. And I'm always open for suggestions. So you guys, please reach out to me. Let me know what you want to hear. This is an open concept. I'm globally trying to get as much information as I can out there to you guys in the crypto space, the stock markets, what's happening in the United States, since it seems to be the shining star, because it is the global fiat currency at this moment. We are making a huge transition in technology and digital acclamation. So this is very, very important that people really pay attention and listen to the dialect, do your read and research. I'm not your personal financial advisor and don't want to be, but I am here to educate and share what I'm reading about, what I'm seeing, and you guys reach back out to me as well. And let's dive into this and have a good time with it. Try to put on a happy smile, because I am a very positive person. You can ask my girlfriends, they'll tell you I try to find the positive in the negative as much as I possibly can, but I do have my rainy days, as they are called, and today is a rainy day. This entire last few days has been a rainy situation with the Federal Reserve. Now, when they kicked off this meeting, it plays a factor into that. It was trying to shed some light on their plans to begin dialing back the support in the U.S. economy, okay? Should other countries be focusing on what the hell's happening with this? Yes, they should, because for months, Jerome Powell, the Fed chairman, has promised U.S. central banks will not start unwinding and ultra easing monetary policies put in place during the coronavirus pandemic until the economy saw substantial further progress, and I quote unquote that substantial further progress towards full employment and consumer prices to be stabilized. I don't know about you. I mean, I'm over here in the Caribbean, but when I did go home for 47 days to close up shop over there, I'm gonna tell you something. The prices over there for bread and a can of beans or frozen peas or a dozen eggs or a half a gallon of milk or even cream for my coffee, I was just like, wow, what happened? I was gone for 6 months in the Caribbean. I come home to visit you guys for 47 days and it's this, and it's only getting higher. My mom is one to definitely stabilize with me. You are not going to believe how much my bread is. Ever since you brought it to my attention, it has increased 3 cents every day. And I have to laugh because I've got to find a little humor in it. But at the same time, it's like, okay, you need to make some justifications because this is not going to get any better. Okay. All right. During the Fed's annual Jackson Hole Symposium last month that was held virtually due to the COVID-19, Powell suggested the bar had been met on inflation, okay, and that the labor market had made clear progress, signaling the Feds would soon start reducing its $120 billion monthly purchases of Treasury and mortgage-backed securities. Now that is worth the laugh. I cannot wait to put this out on my Telegram, my Instagram, and my Facebook. As well as on here with YouTube with you guys. Okay, so at the FOMC's recent July meeting, okay, the views were put that the economy evolved broadly as it has anticipated, okay, but He also stated that the appropriation was to start reducing the piece of asset purchases this year in 2021. The intervening month has brought more progress in the form of a strong employment report for July, but also the further spread of the Delta variant definitely set back for this. Assessing the incoming data was evolving a high risk. The risk appeared to come as a fruition 2 weeks ago when the Labor Department reported that employers added just 235,000 jobs in August and sharply missed expectations for a gain of 728,000. It marked an abrupt drop after solid gains of 1.1 million in July and 962,000 in June. Sure, people complain and say, oh, if you're not have a job, then you're a freaking idiot. There's jobs out there. You're right. There is jobs out there. There's plenty of jobs out there in the United States. I even get on LinkedIn, Indeed, Career Builder, Glassdoor, just to be able to see what the movement is out there. It's crazy. But the employers are not paying. They're doing contract labor. They don't want to be responsible for insurance. You know, people need security, okay? The way it used to be before COVID, and this creates a huge situation in regards to what's happening with this, okay? Now, economists were quick to blame the job growth drag on the Delta variant of the coronavirus, nothing that the job growth in leisure or the hospitality, because travel is back. Tourism is lively. I don't know where people are getting their money to tour, but I run into people from Texas, United States all the time over here in the Caribbean where I'm staying at, in a small little village where I'm staying. And it just amazes me that I have conversation with them and talk to them, and they're like, I'm out. I'm looking for a home. I'm looking to move. They're looking to leave. So now, with this being said, the leisure of going to bars, restaurants, hotels was zero, a sign that Americans were pulling back on spending as the virus spread nationwide. Could this be because of the GDP, the growth and supply and demand? It's escalating so high that people were finding that it was more at ease, that they just needed to stay home, pay the high expenses at the grocery store, and cook their own meals. So now you're back to creating those jobs where the employer has to let the waitress go, the cook go, because what they had even 6 months ago and hiring extra help is not there now. And this created, Yellen warns, for failure to raise the debt ceiling could trigger an economic catastrophe. I say economic catastrophe is already there, okay? With, surprisingly, the low job numbers clouded the tampering outlook considerably, with the 235,000 jobs made in August to be posting, likely gave the Fed a huge pause in pushing out their plans. Now, the U.S. Central Bank has been grappling on how to go about altering the policies put in place in March of 2020 to keep the economy afloat without triggering a market sell-off. Even though inflation has been running well above the Fed's preferred target of 2%, these experts think the Fed will put off any announcement on tapering in its assets until November, when the FOMC meets again for the Federal Reserve Chairman Jerome Powell to come up with another excuse or to reiterate his intent to tamper and not touch these treasury bonds. I don't see how they're going to be able to acclaim with this. As it was stated today and put out on CNBC, an article was stated, weekly jobless claims total 351,000, worse than expected. The first time of filings of unemployment benefits jumped last week, hitting the highest level in a month that was reported by the Labor Department. These claims for the week ended September 18th, totaling 351,000, an increase from the previous month upwardly rise of 335,000 and well ahead of the 320,000 DJ estimates. And the DJIA is your Dow Jones. The total was the highest since the week of August 21st. Markets reacted a little to the news, with the stock market futures pointing to a strong opening and government bond yields slightly higher on the session. There it is. I mean, it's in black and white, and you can't change it or justify it. Now, movement with the average of the initial claims, this irons out volatility. It creates a pandemic declaration of the totals. This is going to be moving as a failure movement to see what exactly they're going to do when November comes for them to be able to discuss this in moving forward. Now, with it being said, the FOMC, and I'm going to go over some of these different determinants with you because I'm getting notes right now of what is FOMC, and I'll get to this with you guys. Their meeting this week was substantial. Today on Thursday, their market manufacturing, their market services, what they were going to do for the economic indicators, the real household wealth, the non-financial debt. These were clarities that were done today's meeting, and where they were going to substantiate with movement in this is troublesome, okay? And where they're going to close with tomorrow for Jerome Powell's initial words offerings, what they're going to do with the Fed's offices of being into transition, where the trade goals will be going into this next week of closing out the month of the consumers index, the home sales index with real estate. So definitely they're going to target this value because it's one that's been keeping the markets afloat, where we're at with income and spending, and where our future holds of what the 5-year expected inflation rate will be. So it should play into a huge value line of what that's going to be. Okay, now, so let me answer this question because I've now got 3 more people. They're going, what is FOMC? Excuse me. Sorry, my dog's trying to get loving. Federal Open Market Committee. The Federal Open Market Committee is FOMC. Let me tell you what it is. It consists of 12 members. The 7 members of the Board of Governors of the Federal Reserve System, the President of the Federal Reserve Bank of New York, and 4 of the remaining 11 Reserve Bank presidents who serve 1-year terms on a rotating basis. What you asked me, another question that has recently popped up is this a necessity? What is the level of the FOMC in Forex? Okay, good, great question. The FOMC is the branch of the Federal Reserve System, the FRS, that determines the direction of monetary policy, specifically by directing open market operations. That's the OMOs. And I know you guys are hearing these letters, or you wouldn't be asking these questions like this, and I'm glad you're asking. So, and I always love to step back. I'm not ashamed to even ask myself. Years ago, I asked that question, what the hell is it? And before long, I was like, I don't even remember. And then I do. Okay, so don't be ashamed to ask. It's okay. Nobody is stupid in what the hell's going on. Okay, even our own Jerome Powell sometimes has that look on his face of, I don't even know how to answer this question. In one of his meetings in 2020, when they finally came out of it, going into the Fed session. And he didn't. He honestly did not know how to answer it. And it's alarming. Okay. All right. Now, how does the FOMC affect the economy? Let me show you. Let me share this with you. Through the FOMC, okay, which is our Federal Open Market Committee. And I just described to you who all is on that committee, centralized banks. The Fed uses the federal funds target rate as a means to influence economic growth. Now, this is to stimulate the economy. The Fed lowers the target rate, and since loans are harder to get and more expensive, which we saw that back when COVID started first popping its head out of the dirt, consumers and businesses are less likely to borrow, which slows the economic growth, and it reels in inflation. Okay, so I hope that gives you a little bit of clarity where you guys can kind of self-esteem yourself on that and see where it's going. Now, one of the things that was also noted that the Fed keeps downplaying inflation risk. Despite the slip of Ms. Yellen back in May, the Fed, including Federal Chairman Jerome Powell, have kept playing down inflation fears as temporary, as short-term phenomenon. The reason they keep giving is that after pent-up demands following COVID, inflation should come back down in the next 2 years. Yet, commodity prices are telling us a totally different story, such as your crude oil or natural gas. Copper plays a huge index in this commodity. I just had a huge YouTube video on copper, gold, and silver. Aluminum, steel, They have surged year to date, going off. I mean, it's unbelievable where these commodities are headed to. These price hikes will soon drive up the cost of items that use these materials. One example of the commodities I'm talking about, copper. It's just like my friends in Texas. They like to turn their air conditioners on. They don't like to sweat. They have to have it 60 freaking degrees. Why? I don't have a clue. But when they go to turn that thermostat and there's no copper wiring for that and it's run out, or it doesn't make the connector for the mercury to switch and it doesn't ignite that, guess what? Guess what? You're not going to get that air conditioner. And you can, thanks to this, if they do not satisfy this for the inflation this way. The historical volatile food and energy sectors are also on the price upswing, with oil prices already at or above their pre-pandemic levels, and food prices are likely to keep rising, which I just shared with you. My mom telling me my bread went up 3 more cents. I mean, started at $2.17. She now pays literally $4.28 for her loaf of bread. She's not a diabetic, but she's watching her diabetes process. She's recovering from kidney stones. She had open heart surgery. So her whole life has had to make a complete adjustment, all pre-COVID and during COVID. And this is a huge upswing on her part. Now, consumers are feeling the pinch. Gasoline is up 60%. Public transportation, including airfare, is up 17%. Used cars and truck prices, which are seen as a key inflation indicator, surged 45%. Okay. Grocery prices are up tremendously. Beef prices have risen over 14%, while pork prices have jumped 12.1%. Poultry prices are higher at 6.6%. Sorry about that, guys. These price increases have been passed on to the customers. Okay. There is not going to be a change. You're going to see this continue to increase. This develops out there where this employment situation is going to hit us again. We are going into this fourth quarter with inflation indicators surging out there on the markets, and this is going to create a huge factor and play into what the market is going to hold and what we need to watch. Now, yesterday, if you followed me on YouTube, Facebook, Telegram, or Instagram, I posted up a video chat of describing to you, of talking about the markets, what is the market and how it works. Okay, so at close of business today, I want to share this with you guys so you can see what we are talking about for today. Let me share my screen with you guys. Okay, of course, I watch Market Watch. They give me a lot of details. My watch list is very clear. And I have this across the globe as well, that it gives me instantaneous numbers. And of course, my phone is dinging 24/7. And this is why I have no personal life, but that's okay. Okay, so let's jump into it. Now, as you can see in the top left corner of Market Watch is the Dow. Okay, it closed with itself of 1.48% up. The S&P 500, it closed up 1.21. The NASDAQ, it closed itself up with 1.04. The global Dow, 1.14. Gold down. Yesterday, when the Dow closed, it closed with the downward sweep. Gold was up. These two toggle back and forth with each other. Oil, it's a commodity. Gold is a commodity. And look, oil, same thing. It was up at the close of business yesterday, and we're down shortly in the curve today. Taking a glance over at Europe, since they are 6, 7, 8, 9, 10, just now going to bed. They did close today. Oh, the FTSE 100 at a close of 0.07% is a negative. The DAX at up. The FTSE MIB is up, and the Stoke 600 over in Germany, 0.93%. Okay, so they're up in their markets with them going to bed tonight. So that plays a huge factor. This morning when I got up early, Asia was already in the green, and they're coming into their close with that of making the transitions of going into the early morning hours tomorrow with being up in the Dow. The Nikkei is down itself, which I'm kind of a little bit shocked, but it's not too drastic. So it can hang itself. The Shanghai is up, the Hang Seng is up, Simsex is up, and so is Singapore. So they definitely hit their curves in regards to this. The crypto, let's take a look. Bitcoin is still holding itself up, trying to make itself grow back up to the 0.22%. We're at 44, coming into it at 42. Ethereum has taken a huge bleed out, but it is still creature crawling itself back up out of the lower 2900s to the 31s, 3,159. Litecoin is one on the down. Monero, which is real big in the market today, it's definitely taken itself in the crypto market. So crypto markets, you're going to see the bleed. You're going to see the bleed. As long as the stock market is doing what it's doing, and I believe with this FOMC having their meeting this week and closing it off for next week to get into the fourth quarter, I do believe you're going to see this. So if you are in crypto, my personal opinion is hold. Don't do anything. If anything, and you have a little extra and you want to, buy on the dip. Buy on the dip, because when they make a close on this and they see that they're not going to win this and they're going to have no choice but hurt us, where it's really going to take a gumption on us with the markets, I'm telling you guys, you'll benefit on the crypto side of this and you'll see the increase come. You just have to be a little patient, as well as you will see the turn come back in for the commodities market as such. So that plays a huge value line living in that market as well. I just want to jump into gold. Let's see if it's going to give it to me real quick. Looking at it from its perspective. Sorry guys, I just give you just a minute here. Oh yeah. Wow, wow, wow. Wow, wow, wow. Yeah, look at there. You can even see that it's definitely done its toll. Moving into there. Whoa, 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 whoa. So it's definitely moving into its market lines, and it searches its day range is 1743.20 to 1745. It's done an open interest of 400,937 in 5 days. It's 0.2, 1 month, 2.76 year to date. It's still down. So it's definitely taken a beating in the overall. Let's see. Let me open it up in the chart line, and and this is just gold. This is just gold. So don't panic. I'm not going to hit all of them. Let's see if it's going to give me the movement. You can see definitely in the flow where we're at with that. Here it is right here. So wow, wow, wow. Yeah, it's definitely coming into a close. 778. Yeah, you can see that this is definitely going to play into, let's take out the max. You can definitely see that this is definitely going to play into the markets with this line this way. Okay, I just wanted to be able to share those markets with you. Listen, I'm Peggy, your Global Pegs. You can find me on Facebook under Peg Goody. Global Pegs. You can find me right here on YouTube with me. Dingle my bell, like my videos, even if you don't think you're getting anything out of it. Please give me a like, subscribe to me. You'll find something that you like eventually. I always try to stay positive. I'm always there for you guys. Shout out to me. Tell me what you want to hear, and I will freaking research it out there and I will discuss. I love discussing things. I like talking about things. Find me on Telegram under Global Pegs. Find me on Instagram under Global Pegs. I can't wait to share more information with you guys. Y'all have been super fabulous. I really appreciate your patience today. Thank you guys so much. Hang tight. We've only got a few more days to deal with this with the FOMC and what they're going to do with our future of funds. So watch out. Be careful in your investments. Pay attention. Do your read and research. And I will see you guys really soon. Take care. Have a great day.